All right, so the GIFT Nifty is indicating that we'll have a very good start today. We already covered Z Entertainment and how that will be on our radar, but our entire team is standing by to give you the list of top 10 stocks that you should be focusing on today. Let's kick it off with ICICI Bank. Good set of numbers coming through. Abhishek has the fine print for us. Abhishek, over to you.
Well, it's a good set of numbers coming in. Slightly mixed back if you take a look at the core operating profit growth, etc. So to begin with, the good part is that the asset quality, one of the best that you are seeing in last 9 to 10 years, with gross NPA ratio and net NPA ratio at 2.3% and 0.44% respectively. Deposit growth of 18.7% YOY is the second highest in last 11 quarters. However, sequential growth of 2.9% is the lowest in last 6 quarters. So they need to pick up on deposits. Overseas book remain strong with respect to net interest margin being at 1.47%. The subsidiaries quarterly PAT is at all-time high of 1,994 crore, led by the fact that all-time high quarterly PAT is seen for ICICI Pru, ICICI Sec as well as ICICI Home. What is the weak part? The core operating profit growth, that's at just 10.3% YOY, perhaps the lowest growth that you are seeing in last 17 quarters. Net interest margin is at 5-quarter low of 4.52% versus 4.61%, in line with management guidance that net interest margin will be declining, and they expect further decline in net interest margin in Q4. RWA to advances, that is risk-weighted asset to advances, is at 14-quarter high. With respect to the PNL, NI and PAT is a beat on our poll. Back to you.
Okay, all right, Abhishek, thanks a lot for that. So ICICI Bank look good, but IDFC First Bank not so good, Abhishek?
Well, not so good in the fact that, net interest margin has not translated into ROA. So net interest margin is at all-time high of 6.42% versus 6.36% YOY and about 6.32% sequentially. In terms of RWA to advances, it's at 9-quarter high and perhaps industry high of 117.8%. A 6-quarter high and one of the worst in the industry with respect to cost-to-income ratio being at 73.1%. ROA, that is return on asset, is at 6-quarter low of 1.06% versus 1.11% YOY and about 1.16% sequentially. The good part is that the CASA ratio has improved, versus the industry trend of a declining CASA ratio. IDFC First Bank has seen some, improvement in the CASA ratio sequentially. Slippages are elevated at 1,422 crore, and for last, 3 years or so, their quarterly slippage ratio has been north of 2.5%, which is a worry factor. In terms of PNL, NI is a beat on our poll. However, PAT is below our poll. Back to you.
All right, Abhishek, thank you very much for that. Lots of financials, banks in focus, but Cipla is the other one. It's the all-round decent performance from Cipla. Ekta is here with details. Ekta, morning.
Thanks for that. Well, firstly, Cipla wasn't supposed to come out with numbers yesterday. They preponed their board meet because there was a possible leakage of their numbers which took place. But nonetheless, revenue up 13.7%. The street was anticipating 11% growth. Margins better than expectations. In fact, has probably come in at the highest levels ever at 26.5% versus estimates of around 23 to 24%. And the profit was higher than estimates as well, despite an impairment of around 195 odd crores. Now, the US drove sales. So US was around $230 million versus $218 to $225 million in terms of estimates. India was up in double digits for the third consecutive quarter. So India was up 11.6% year on year. International markets and API markets were flat on a Q-on-Q basis, but the margins did make up for it, and the fact that the US grew for the 15th consecutive quarter. Now, there is a call which is going to take place on the 25th of Jan at 4:30 p.m. More details from the management then. But for today, despite the stock run-up that we've seen over 50% from its 52-week low, the margins and the US sales could probably drive the stock a little higher.
All right, thanks a lot for that. Let's hop across to Mangalam now. He's going to tell us how Colgate's numbers look this time around. Mangalam, over to you.
Well, it's a good set that came in. In fact, the management told us before the quarter that, the momentum that they'd gained in the first half will continue in the second half, and that did continue. Revenues were up 8%, EBITDA was up 30%, and the net profit was up 36% year on year. And these numbers not only were good standalone, but even if you compare it to our poll on both the top line as well as the bottom line, it was a big beat. And the biggest beat was also led in the margins, that the company reported margins of 33.6%. What was that led by? Gross margins up 630 basis points, near 72.5%. The company did not scale back on ad spends. In fact, they added more. So ad spends as a percentage of sales were also up by 150 basis points. But despite that, the EBITDA margins were up nearly 550 basis points. The company said the toothpaste segment achieved double-digit growth. The business saw positive volume expansion. The only quibble on the street is that the volumes for Colgate this time around have been low single digit. But then again, volumes have been low single digit for the entire FMCG sector. So it will be important to see where Colgate performs from here. My sense is it should open in the green.
All right, Mangalam, thanks very much for that. Well, let's talk about Persistent Systems. I think out of the IT pack, one of those few which has done so well over the last 1.5 to 2 years, which has generally been tough for the space. Rima is here with details on this one. Rima, hi, morning.
Hi, good morning. So Persistent has reported another strong quarter in what would have been a very challenging, last 3 months for the industry. So constant currency revenue growth at 3.1% ahead of estimates. The company's margins too have expanded and come in at 14.5%. The board has approved a stock split in the ratio of 1:2. In terms of total deal wins, they are higher on a quarter-on-quarter basis by nearly 9%. And most of the companies have reported lower deal wins, citing a weak macro and seasonally tough quarter. But for Persistent, the TCV has gone up, though the new TCV has declined on a sequential basis.
All right, thanks a lot for that. Well, Oberoi Realty is the other stock that we're looking at. Let's find out how it did this time around. Sonal is here with the fine print. Sonal, over to you.
Good morning, Sonia. Well, Oberoi Realty's pre-operational update the operational update was lower than what the street was working with. The pre-sales volumes was up 18% on a quarter-on-quarter and on a YOY basis, but there was a decline in pre-sales on a quarter-on-quarter basis by 18%. There was an increase of 25% on a YOY basis. But despite all this, the numbers are below than what the street was estimating. The company says, however, in the month of January, they did pre-sales of around 822 crore rupees from their new project in Goregaon. Ambit says the average selling price declined quarter-on-quarter amid higher share of low-value launches, especially the one from Thane, and the sales are below estimates as well. Morgan Stanley has an underweight rating. They say third quarter pre-sales, margins, values, all of them were below the street expectations, and pre-sales could result in underperformance versus the peers which have done good operational performance in quarter 3, but pre-sales have picked up in fourth quarter, so the outlook is positive, but third quarter numbers lower than the peers and lower than estimates as well.
All right, Sonal, thanks very much for that. Let's go back to Rima. Zensar Tech also reported. She's got details. Rima.
Well, Zensar has reported a weak quarter. The company's revenues have fallen by 3.8% quarter-on-quarter. The company said in the call the furloughs in Q3 were deeper and wider than what they saw last year. Margins too have fallen by 140 basis points sequentially, driving a 7% decline in the profitability. So Zensar stock has seen a fabulous run-up in the last 1 year, but these numbers are a bit muted.
Okay, all right. Thanks a lot for that, Rima. Well, let's go back to Abhishek. Abhishek, you want to tell us about J&K Bank as well as Spandana Spurti?
Well, asset quality woes are, coming into the BFSI sector. Slippages have increased 23.5% quarter-on-quarter for J&K Bank. Annualized slippage ratio of 1.24% versus 1.03% in the previous quarter. Loan growth remained muted at 15.5% YOY and about 2.2% sequentially. The net interest margin saw a sharp decline to about 3.83%, decline of about 24 basis points on a quarter-on-quarter basis. So NII growth was weak. It grew by just 1.8% YOY and it was down 4% sequentially. Lower provisions helped their earnings, grow by 35.1% YOY and about 10.5% sequentially. For Spandana Spurti, the net interest margin dipped sharply on a sequential basis, 13.3% versus 14.1% in the previous quarter and about 13.8% in the same quarter last year. So there is a sharp reduction in the net interest margin. NII is down 3% quarter-on-quarter, leading to operating profit decline of 8% quarter-on-quarter. Asset quality deteriorated. Gross NPA and absolute value increased by more than 22% quarter-on-quarter. As a ratio, it was at 1.61% versus 1.4% in the previous quarter. AM growth remained robust at 51.8% YOY and more than 6% sequentially. Back to you.
Okay, well, long day ahead for you as well, tracking all of these numbers. Abhishek, thanks for providing all of those details for us. Here's a quick recap of our top stocks with positive news flow: ICICI Bank, Cipla, Colgate, Palmolive and Persistent Systems. While stocks with negative news flow, Z Entertainment, of course, a big setback there. IDFC First Bank, Oberoi Realty, J&K Bank, Spandana Spurti and Zensar Tech. Take a short break. On the other side, Amnish Agarwal of Prabhudas Hiradar will join in to analyze all of these stocks for us. We will also be connecting with Manish Tandon of Zensar Technologies for their Q3 earnings. Stay tuned.